Hey, how's everyone doing? It's great to be back in Amsterdam. My name is George Mekhail. I'm the managing director of Bitcoin for Corporations, where our mission is to accelerate corporate Bitcoin adoption. This is actually my fourth time here in Amsterdam. And I got to tell you, every time I come, you guys just love to remind me of the storied history of corporate finance here in the Netherlands, which I don't blame you. It's a great history. Actually, getting ready for this talk, I finally had the chance to read up on the Dutch East India Company, and wow, there's a lot going on there. I mean, you guys probably, if you're from here, learned about it in school growing up. It's a checkered legacy, to say the least. But just to catch you up, we're talking about way back in the 1600s, right? The VOC, as it was known, was the world's first publicly traded company right here in Amsterdam. It was known as a joint stock company, which is basically today's equivalent of a corporation. And the innovation of the structure that they created allowed for capital to flow into a single enterprise from many different owners, right? This was a brand new idea at the time. It was a publicly traded equity, first of its kind, that allowed people to spread risk and introduce the concept of a board of directors, so you can thank the VOC for that. And it also allowed them to finance their expeditions, their voyages all around the world as the Dutch dominated the spice trade. You know the history. Again, we won't get into all of the details, but what we're talking about is actually the structure and the concept itself. It was groundbreaking at the time. The fixed share structure made it so that the VOC was tradable equity, right, all around the world on the world-renowned Amsterdam Stock Exchange, not that far from where I'm standing. And the point is that it's represented a brand new type of technology, right? First of its kind back in this day, 400 years ago, that we still benefit from to today. And as we talk about the state of corporate Bitcoin adoption, and I want to dig into why we've seen a wave of companies adding Bitcoin to their balance sheet, including a few of my personal favorites, just to point them out, the beautiful 40 or so that are part of the Bitcoin for Corporations network. Before we get into that, it's first important to understand how we got here, right? How fiat currency has tainted the purpose behind the actual corporate structure, and how Bitcoin Treasury companies are different. So again, going back 400 years, the investment vehicle that the VOC introduced was revolutionary. But why? Like, why do all this? What's the underlying point of setting all this up and pooling capital and having a board and all that kind of stuff? I was curious, so I asked Google. I just posed the question very simply, like I do. Google, why do people even buy stocks? What are we talking about here, Google? Tell me, help me out. And here's what the bots had to say. People buy stocks. Yes, I'm reading to you from just the AI definition. Primarily, this is why people do this, primarily to build wealth over the long term. Everybody say long term. Join me. Come on, we're gonna, oh, that was lame. We're gonna do that again. Everybody say long term. That's what we are talking about today. Here's the thing. We don't think about the long term anymore. I don't know if you noticed this. When I was little, we always talked about like saving and putting money in a savings account. We don't do that anymore. We don't do that anymore because our money is broken, obviously, which we're going to get into. But build wealth over the long term through capital appreciation and dividends, also outpacing inflation. I have a feeling that's a new part of the definition. Diversifying income and ownership influence in companies. Thank you, Google. Make sure you're polite to your bots so that they remember you when they come into power. Okay, it's safe to say that enabling investors to build wealth over time was a key consideration of the joint stock company. In fact, the VOC returned dividends back to their shareholders in the spices that they procured at their voyages, which I think is crazy. We don't do that anymore, right? Like, that would be weird if a box of cinnamon or whatever showed up every quarter. We return currency that instead is eroding. So the thing that's important to keep in mind is back when the VOC was around 400 years ago, there was this understanding that the money was going to hold its value over time, right? 1 florin equals 1 florin. No one doubted that. No one was like, oh man, this is going to lose value. People were just like, cool, that's my money. That's going to remain my money, and it's going to retain its purchasing power. But then we all know how the story goes, right? Even through Bretton Woods, 1944, gold standard was made official. And then what's the year that everything fell apart? Anybody? 71, there it is. We know there's Bitcoiners in the crowd. 1971, the social contract of hard money was broken, right? Nixon suspended the dollar convertibility into gold, and the link that held finance together for 400 years was over. It began to unwind, and the world stepped into a floating, policy-defined monetary regime. From then on, the value of money became fully untethered to anything that was predictable, like gold, and this shift would forever alter incentives for savers, investors, and for corporations. And that is where we find ourselves today. That concludes my history lesson. We are in the present moment where our money is melting. One of the most depressing charts that you've seen. We've gone from spices being sent back to us for our investments to literally monopoly money that's consistently eroding value. And I don't know about you, but I'm personally a little bit tired of just accepting this as a fact of life. I've been tired of this. It's the reason I got into Bitcoin. And I'm motivated to do something about it. Because I don't think that it has to be this way, right? Consider the impact on any market participant when cash is steadily losing its value, right? Nixon essentially created a hamster wheel effect, causing everyday people to constantly be chasing their purchasing power rather than build wealth with their earnings like we did 400 years ago. For corporations, that meant returning nominal cash to investors was no longer guaranteed the preservation of their value, which, if you go back to the definition of why people even buy stocks to begin with, made investing unattractive. So what is a corporate board to do, right, as the money is being debased? Well, I'll tell you, 3 things that we've seen happen. The first, stock buybacks, right? We all know about this. It was normalized by the SEC in 1982. Corporations began to just buy back their stocks because why not? I mean, look at year over year, just the stock buyback continued to increase. They were chasing their purchasing power just like everyday savers. This hit its peak at 943 billion in stock buybacks in 2024, right? Just shy of $1 trillion in stock buybacks, and nobody receiving spices in exchange. The second thing that happened was the M&A explosion, right? Mergers and acquisitions absolutely blew up. Again, how else are you going to return a value to your investors? Why not increase your earnings per share by just acquiring another company that's doing well? And then the third thing was short-termism. So corporations began to think quarter over quarter instead of thinking over the long term, which was a huge shift in corporate behavior, right? When they were thinking about years-long voyages back 400 years ago. And so, again, I don't have to tell you this. You're all Bitcoiners. I feel silly even having to say it. Fiat encourages high time preference behavior, right? We know this. Fiat encourages high time. No matter how many times you've heard it, though, it doesn't change the fact that it's still true. And again, the water that we swim in doesn't change the fact that we're still swimming in this water that is like gross and needs to be changed. So what a time for Bitcoin treasury companies to enter the picture, right? Half a century into this experiment, and it's not going great, the experiment, by the way. The market is craving real solutions, not just temporary band-aids like M&As and stock buybacks. Corporate Bitcoin adoption is actually restoring the economic vision that existed up until 1971 by reintroducing a sound money standard. So this is the part of the talk where we shift into the positive, right? Bitcoin is the new hard money. Like the music starts picking up and it's like, tired of losing your hard-earned money. Like Bitcoin is the solution. So not just digital gold, but Bitcoin is digital gold on steroids. And so far institutions have managed to lock up 5% of the total supply, right, which is substantial in the context of Bitcoin's 21 million supply, but in the context of the broader pool of assets that all around the world, it's actually not that big, right? 2 trillion is tiny compared to 1,000 trillion, which is, I think that's a quadrillion, which is a number that you don't hear a lot. But one quadrillion. So I mentioned earlier that our mission at Bitcoin for Corporations is to accelerate corporate Bitcoin adoption. And we're doing that in a number of ways, through education, through advocacy, through storytelling. But I want to be clear that the opportunity here isn't just corporate adoption for the sake of corporate adoption, right? We actually want to accelerate hyper-Bitcoinization as well. And I've recognized that the institutional demand ultimately leads to hyper-Bitcoinization. That's what I get excited about. That's why I'm here. That's honestly why I became a suit coiner, put on a suit. And you know, I love being a suit coiner. It feels great. It feels good to be back on offense. That's what I like about it, right? I want to play a role in advancing this narrative. I want to play a role in us moving back to hard money in a way that feels active, not just passive. Actually, one of the things that I hate about sort of the mentality in the Bitcoin space sometimes is that we feel like Bitcoin is inevitable and we can just kind of sit back and let Bitcoin do its thing. I disagree. I think we need to actually stay on offense. And so we've grown the BFC network pretty rapidly. We're now approaching over 50 members spanning 15 different countries from around the world. And it's been a blast to have front row seats here to the recent wave of adoption. But again, I got to say, I'm not quite satisfied with the pace and the urgency and how fast things are moving. I'm not convinced that our efforts are actually keeping up with the rate of inflation. So I want us to dream bigger. I want us to envision a world where that little orange dot becomes much bigger. I took the liberty of editing this chart with my apologies to Jesse Myers, who made the original one. But I don't know about you, but I want to see Bitcoin explode in my lifetime. I want to see hyper-Bitcoinization actually start transforming lives. And so I think that it's our responsibility to find ways to move the needle and get back on offense. So some more propaganda from the Bitcoin for Corporations teams. We've had an incredible first year. And when I talk about going on offense, it means you can expect us to double down on our efforts as we continue to move along here. So we plan to bring things like the Bitcoin for Corporations Symposium to different parts of the world. We actually had it last night. I'm not sure how many of you were there, but we had a great time. And so next year you can expect to see us in DC, where we are having US midterm elections. So one of the ways we plan on being on offense is to continue to advocate from a policy standpoint and influence the decisions in DC that impact our community. Another way, just really practical, as I begin to wrap up here. I want to share two tools that you can use today that the BFC team has been cooking up. And the first is the Bitcoin Treasury Simulator. This is really cool. You can enter any ticker symbol. If you go to bitcoinforcorporations.com, you can choose an allocation and a time period, and then it'll spit out how much money any individual company has left on the table by sleeping on Bitcoin. And then it'll generate a nice little graphic that you can share on social media. So this is a small little thing that you can do to get back on offense and show that this is actually a real thing. Corporations can't ignore us anymore. That's the thing. We have strength in numbers. We have the narrative behind us. We have companies that are obviously executing in a way that is harder and harder to ignore. We have the facts on our side, and I think it's time for us to make this a matter of fiduciary obligation for these boards, for these CFOs that are sitting on their hands while the greatest asset in their lifetime is absolutely exploding. So we have the facts on our side. Don't forget that. Stay on offense. And if you want to go even harder, we have another tool for you, the Bitcoin Treasury Shareholder Activism Kit. It's now live, right? Now this one is designed for current shareholders of public equities. And right now it's focused on the specific SEC filings that allow us to actually take action and get a proposal on the company's next board meeting for an actual vote. Now, if you go back to the AI definition of why people buy stocks, one thing that we didn't really touch on was this last piece. It says having a degree of ownership and influence in companies. And this is what this next tool actually lets you do, right? So by having influence in a company, by being an actual shareholder, you have to meet certain threshold requirements, but assuming that you do, this will actually spit out an entire activism kit that you can copy and paste, that you can send in to the SEC, and you're leveraging SEC Rule 14A8. All right, so if you really want to nerd out, this is for you. But imagine what happens if every Bitcoiner who was a shareholder in Apple did this and sent a letter in and got a proposal, and we started just moving the needle. And look, Michael Saylor did a presentation recently to the board of Microsoft, and I think it was like 0.2 or 1% maybe of the shareholders were like, yeah, that's a good idea. So we got a lot of work to do. If Michael Saylor is pitching Microsoft and it's not doing anything, but we got to do something. We can't just kind of sit on our hands and expect this thing to happen without our participation. Again, if we want to see hyper-Bitcoinization move faster, we got to play a role. I want to close with one final stat and come full circle to the title of my talk, which is the state of corporate Bitcoin adoption. I realize that there's been a lot going on in this space, and you're probably not happy with some of the Treasury stock performance prices. I get all that, but this is the one stat I want you to remember to kind of just let you know where things are at. I think this is the only stat that matters, and it's that institutions continue to buy way more Bitcoin than is being mined quarter after quarter. right? At a higher rate in Q3 than in Q2. And if you look back to Q3, it wasn't the most impressive quarter for the performance of Bitcoin treasuries. But meanwhile, institutions are stacking more Bitcoin than is being mined. Everything is being repriced in Bitcoin. Sentiment and price are, it's not sustainable with the current demand. And we are watching the active return of hard money unfold in real time. So thank you all for being here again, taking the time to listen. Myself, the entire Bitcoin for Corporations team are here. We will be at the BTC Inc. booth. We'd love to meet you. We'd love to say hi, talk about how we can get you involved. I hope you enjoy Amsterdam, and I hope to see you at some of the after parties later tonight. Have a good one.